All right, we're here today with Chuck Wiebe of BIA Capital, and we're very excited to have Chuck as our guest today to talk with business owners more about capital raise. And Chuck, if you would start out by just telling us a little bit more about yourself and BIA and what you do there.
Great. So thanks very much, Joy. I look forward to the conversation. BIA Capital Strategies is a registered broker-dealer. We provide investment banking services to primarily privately held companies, and these can be companies that are started by a group of individuals or a sole proprietor. It could be a private equity-sponsored company, or it could be a family-owned company that's through multiple generations of ownership. We were founded to extend the client services that were being offered at the time by our research and consulting affiliate, BIA Kelsey. They had established a really strong foothold in terms of information that they were mining for a lot of different purposes. And it established relationships among investors, lenders, lawyers, accountants, regulators, and a wide range and number of communications-focused companies.
So, Chuck, then let's talk about the right point to start thinking about the need for capital and for valid purposes for these businesses.
Yeah, and that's a tough question because sometimes circumstances might overwhelm a company, and all of a sudden they're presented with the ideal acquisition, and they need to figure out can we raise the capital to make that acquisition, and if they had the time to think carefully about where do they want to head as a company, what are their strategic objectives, do they want to grow, and if by acquisition, how, and with that thought process goes, okay, do we need to plan for this, plan ahead of time? And our answer would be yes, absolutely. You really want to think through a lot of the strategic alternatives before you and make sure that no matter which of those you might pursue and how you might prioritize those and establish timelines for them, you want to be prepared to act and execute when you need to. And that does take time. So ideally, we'd be talking to companies on a regular basis and recalibrating those strategic alternatives and that timeline. But most importantly, having documentation at least on the shelf ready to be tweaked and customized for the passage of time. Have a data room set up that's always there, and a financial model that we can, again, kind of update as appropriate. So a lot of times we're asking to establish a relationship, a more formal relationship with a company earlier than they may expect, just so that they're not caught by events beyond their control. We'd love for them to be able to make the right acquisition at the right time and then with the right sense of urgency. And I think that's why you have this type of relationship.
Do you tend to have agreement with the business owners you work with about how much capital they actually need?
While initially we may not, I think ultimately we get there. And by that I mean we want a financial model that is so exacting, even within some range of outcomes, but so exact that it basically spits out the number and the amount of capital that we need. We tend not to offer much fluff or much in the way of committed but unfunded capital. We'd much rather have the ability to fund much of the capital that's actually needed rather than having to pay for capital that is committed but not used. And the only reason for that is trying to preserve as much ownership as we can and not dilute our clients' equity interest. So there's a cost to having too much capital, and we're sensitive to that. At the same time, depending on the company, they may need some additional capital, most likely for just a cushion in the event of unforeseen circumstances, as opposed to an acquisition basket of capital, which I think does get pretty pricey and is hard to defend. And ultimately, the investor or lender has to approve it anyway. So we question, why do you need that if you don't have control over actually deploying that capital?
So then how do you take someone to market and determine which capital providers they should be presenting to?
I guess it's a little bit of a secret sauce. Everyone has access to lists of lenders and investors. Those lists have gotten more and more refined as more and more transaction information has been added into it. People know kind of what are important deals for and attractive deals to certain investors, and what's going to turn them on, what's going to turn them off. With the investors and lenders, I think we also know who's missed out on deals, and therefore who might be particularly eager for a type of deal in one industry segment that they favor. We might know that we know a lender got burnt on a deal in another segment, and they're not going to be attracted to it, so we don't want to approach that lender for that particular segment. So I think it's starting with, let's start with the universe of investors and lenders that may be appropriate for a particular company with a particular amount of capital and use of proceeds in mind. And then let's start to customize that list for that company. And we're trying to find those investors and lenders that are most suited to that particular company. So there's a lot of winnowing down over time. And then I think also personal relationships that we have or the company may have to really further winnow down that list to something that's manageable. We are firmly believers that a shotgun approach to raising capital is really destined to take too much time, be kind of a waste of time. We really want to have a more rifle shot approach to having the right investors and lenders at the table. And we'll stretch a little bit and have a slightly larger group, but at the end of the day, hopefully within that group, we've got people who are keenly interested and really want to have a group of 2 to 5 potential participants.
Wonderful. Well, thanks again, Chuck, and we look forward to the next webcast.
Great. Thank you.